this video, I would like to take a look on a couple of stocks and a couple of major events that's playing out in the market. This is Tesla. This is the accuracy of Fibonacci levels I developed in 2008. Proprietary Fibonacci levels. This is reversal zone. This is exactly why Tesla reversed. No one should be surprised. Let's take a look where Tesla is now, as on daily chart, Tesla overextended. As you can see, I'm not using word daily for a very good reason, but it is daily chart. Knowing what chart to use, knowing what Fibonacci levels to use is a key. Using Fibonacci levels randomly will never work. So, what you're witnessing in front of you is more than 20 years of work with Fibonacci and price action. Something that I find fascinating and something that I spend every single day studying. So let's take a look what Tesla is telling us now, as S&P remains in massive bearish correction on hourly chart. So here's Tesla, bullish rally overextended. Tesla still has space until 2015. But right now Tesla will start giving you endless pullbacks, testing your knowledge of what to do with your position. This is a place where Tesla will start giving endless bearish pullbacks non-stop. Knowing what to do with your position is the key. And that's where I step in. Knowledge of Fibonacci is everything. Acquiring position near reversal zone, not an option. So this is a reminder what happens if you do not know what to do with your position. This is Facebook. Facebook reached reversal zone and reversed. Tesla will do the same. Knowing what to do with your position is the key. Here is another one, as price does the same thing every time. This is Valiant. This is what price had done, and this is what I said in 2015. Buying Valiant at reversal zone, worst idea ever. Shorting Valiant, brilliant thing to do. Top hedge funds acquiring longs on Valiant. And I say, bias is short. I'm actually surprised that Valiant's still breathing. I expect zero. I expect Valiant as a company not to exist. And this is what price does every time. Knowing what to do with your position is everything. Here is Apple. Very powerful reminder that fundamentals do not matter. As Apple collapsed in 2015 from reversal zone, despite stunning earnings. And as I said in January 2016, expect bullish rally. Bullish rally played out many months later, despite worst earnings in 13 years, because Fibonacci said so. Market preset by Fibonacci levels. Knowing what to do with your position is everything. Studying Fibonacci since 1990, I can prove to you every time that market preset by Fibonacci levels. Apple heading back up to 128. Knowing what to do with your position is everything. Apple danced in ultimate correction and respected this Fibonacci support present in front of you for the last 3 years. All levels always far in advance, as Fibonacci is the only predictive tool in the market. So long-term Tesla remains extremely bullish. Again, if you're investing based on daily chart, you're holding position for a couple of days, maximum a couple of weeks. If you're holding position for years to come, Tesla extremely bullish. Tesla will test you at 231. 231 will be key level. What to do at 231 with Tesla is the key. After 231, 245, and then 267. Monthly chart will play out for years to come. QQQ sitting very pretty, struggling immensely. This is where QQQ can become extremely unpredictable. This is what I would love to see on QQQ. Collapse to here. If QQQ will not collapse to here, it will chop here, acquiring position near this level, bad idea. This is a brick wall. This is ultimate Fibonacci resistance. As you're witnessing, exact same level was crucial Fibonacci support on Apple. As I said, well before bullish rally. Expect bullish rally. As I say to you right now, on QQQ, expect brick wall. Acquiring long near this level, not an option. Once this level is out, price will head higher up. But acquiring position randomly, never an option. And this is what price does every time, no matter what you trade. So once again, this was Euro in 2014. I said Euro heading into free fall, but Euro will reach the brick wall on weekly 33.67. Brick wall. It had taken Euro months and months to break through this brick wall. Then I said, this is your level on monthly. This is your brick wall. 105. Once 105 is out, Euro will head to 87. After that, Euro is heading to 60. This is exact same thing I said about Euro and Pound. This is Euro now. Taking Euro 2 years to break through this level. Euro reached 137, 135 last night. It's only halfway through. Collapse from 38. And this is Pound. I said Pound in free fall. I said expect this level to be broken. Collapse on Pound started at 2100. I said Pound heading to 24, 83, and then 106. Let's take a look on Pound. This is Pound. Pound already blasted through these levels. Pound already reached 119. Quite shockingly that Pound moved a little faster than Euro. This level already out. Pound heading to 106. And this is what I demonstrate to you daily. And this is the accuracy of the method, no matter what you trade. Using Fibonacci levels is everything. Respecting Fibonacci levels is the key. Knowing the rules and never acquiring position into reversal zone is absolutely crucial. Here is another example. I worked with hedge fund, very young guys, late 20s, early 30s. They loaded up on FIT. When I looked on their chart, they made me cry. I said, give yourself a favor, get out of FIT. They said, no, 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 no. FIT is such a cool gadget. We're staying through earnings. Good earnings. FIT collapsed 50%. No surprise. This is what FIT had done from reversal zone at the time of good earnings. You wanna play by earnings or you wanna respect the rules? This is FIT. As I said, expect free fall. investing on fundamentals, making your decisions based on delayed indicators will never work. Top hedge funds in America down 60–70%. Quant funds, Fibonacci funds are booming. Top funds in America making decisions based not on fundamentals or indicators. Top funds that basing on fundamentals down 60–70%, buying Valiant at reversal zone. As I said, expect Valiant to zero. Valiant as a company will not exist. And that's the exact same thing you're witnessing each and every day. This is the accuracy of the method that applies to any instrument in any time frame. So, as you're reading my posts from the beginning of the year, this is a chart on oil that's been present in front of you for the last 2 years. You know the rules. You were acquiring oil at reversal zone. So where is oil heading to? All the levels in front of you far in advance. Oil is heading to 56. After this, oil is heading to 61. After this, oil is heading to 70. Acquiring position randomly on oil, if you are holding position for months and years to come, not an option. This is where oil stuck in massive correction. What would I like to see on oil? I would love for oil to crash and burn back down to reversal zone. As knowledgeable trader, knowledgeable investor acquires position at reversal zone. If you're acquiring position on oil randomly here, expect pain and torture. Knowledge of Fibonacci levels, knowing where to enter, where to exit the position is everything. This is exactly what I warned you about on gold. Browse my posts, as I said, for many years. Expect reversal on gold from reversal zone. And this is where reversal is expected. So, bullish rally on gold as posted on my LinkedIn profile on February 2nd reached all targets, taking gold 6 months to do so. Knowing where to exit the position is everything. I would love to see gold back down at reversal zone, but acquiring position randomly, not an option, as gold can continue into free fall to drastically lower levels. And that's the key. Knowing where to enter and knowing where to exit the position is everything. Remember 2011? Remember everyone screaming on top of their lungs, buy gold? I said, bad idea. Gold comes to reversal zone. You exit the position. Only if rules are met, position can be shorted. What to do at reversal zone when gold breaks through this Fibonacci support present in front of you for years is the key. So this is short-term levels on oil as I presented since November 29th when I said expect oil at 52 on hourly. This was reversal zone on hourly. Is anyone surprised that oil reversed from reversal zone? No surprise whatsoever. Fibonacci said so week before. Oil came out with bullish news, but oil collapsed as expected. Knowledgeable trader acquires position at Fibonacci support. This morning we opening up at the time of oil news release once again at reversal zone. We need oil to crash and burn, acquiring long into reversal zone, not an option. So here's S&P. This is where bullish rally came from. This is a specialty and focus of the method. Trend inception. Bullish rally started in 2009, reached reversal zone. Market danced in ultimate correction in 2014. But this Fibonacci support was respected. S&P is heading to here, traders. 2300 is next, as I said for years. As long as market respected this support, bullish rally will go on. This was unbelievable reminder of the importance of Fibonacci support day after the election, as you're witnessing where bullish rally came from. There was no reason on the planet to short this market day after the election. Hedge fund convention day after the election, and I'm listening how funds shorting this market, and I'm terrified. Why? Bullish rally is on. Buy this market. Fibonacci support is respected. No reason whatsoever to short. None. Fibonacci levels will forever override any fundamentals. Fibonacci levels are not delayed like other technicals. Levels in front of you are proprietary levels. I live and breathe Fibonacci. Fibonacci applies to any instrument and any time frame. So here's oil short term, here's oil retail levels. So oil been respecting this crucial Fibonacci resistance for the last 2 days. Oil in massive correction. So here is LGCY. LGCY is sitting at reversal zone. Last chance was acquiring position was if you are holding position for a couple of years before reversal zone. Once the reversal zone is reached, price becomes unpredictable. Acquiring position well before reversal zone here is what knowledgeable trader does, not here. Right now LGCY reversed because reversal zone is reached. Right now LGCY in massive bearish correction. On weekly, let's take a look on monthly. This is everything as price been dancing in this corrective dance for an hour. You know corrections, you are a knowledgeable trader. Ignoring corrections as a day trader, as an investor, not an option. Mastering corrections, knowing when not to trade is everything. I warned you an hour ago. Best thing you can do is leave the screen. And that's how knowledgeable trader cuts down on his computer time completely.